Everyone wants a number. $100,000, $250,000, or maybe the crash to $20,000 again. But smart investors don't chase numbers. They build frameworks. Because no one knows the exact price at the end of 2025, but everyone will live inside the consequences of how they position for it. So today we're not playing the guessing game. We're building the Bitcoin 2025 roadmap, a structure that works no matter which side wins, the bull, the bear, or the base reality in between. See, Bitcoin isn't a stock, a meme, or a passing trend. It's an evolving mirror of the global economy. It reflects liquidity, confidence, regulation, and fear all at once, a living heartbeat of human belief. And as we head into 2025, we're standing at one of those rare points where the charts meet history. The halving is behind us. Inflation is slowing. Interest rates are flattening. And institutions, those same players who laughed at Bitcoin 10 years ago, are now buying it in billion-dollar ETFs. So what happens next? That depends on how you think, not how you guess. Every investor faces the same temptation. To pick a number, call it their prophecy, and pray the chart proves them right. But wealth isn't built on prediction, it's built on preparation. And preparation starts with 3 words. Base, bull, bear. Let's talk about them. The base case isn't flashy. It's rational, disciplined, and most likely. Bitcoin grinds higher as institutional flows keep coming, inflation remains contained, and interest rates edge lower. No moonshots, just steady adoption and a healthy market that finally acts like an adult. The bull case is what you see when everything aligns, when the Fed cuts rates faster, liquidity returns, and the narrative turns Bitcoin into digital gold 2.0. Corporations add it to treasuries. Governments relax regulation. Mainstream media starts calling it a hedge against everything. You wake up one morning and realize the world just repriced trust, and Bitcoin won. The bear case? That's the dark mirror. Tighter rates, macro shock, regulatory fears, a derivatives wipeout, or a crisis of liquidity. The same institutional flows that lifted Bitcoin could turn into exit floods if fear spikes. And suddenly, we learn again that leverage never left the crypto system, it just hid under fancier names. But here's the truth most people won't tell you. You don't have to know which one happens to win. You just have to build for all 3. Because smart money doesn't pick sides. It sets rules. It decides when to add, when to trim, and when to sit tight. It monitors a few key signals, ETF flows, real interest rates, and a liquid supply, and lets the data do the talking. When flows are positive, rates are falling, and supply keeps shrinking. That's bullish. When flows reverse, rates rise, and holders start selling. That's bearish. when the signals conflict. That's your base case: steady, boring, profitable over time. This isn't YouTube hype. It's what real money does, in hedge funds, family offices, and institutional desks from New York to Toronto. The goal is simple: build a framework that lets you sleep while Bitcoin does its thing. No fear, no FOMO. Just structure. Because the moment you replace emotion with systems, you stop playing the casino and start playing the clock. And the clock always wins. So before we dive into what 2025 could really look like, let me make this clear. This video isn't financial advice. It's financial perspective. It's not about guessing where Bitcoin ends. It's about understanding where you stand. Because in every cycle, there are two types of people: those who chase the top, and those who build a plan. And the difference between them is peace of mind. Welcome to Finova XAI, where we don't predict the future. We build a roadmap for it. Let's build this roadmap step by step, not by hype, but by evidence. Because Bitcoin's path to 2025 isn't magic, it's math, psychology, and liquidity. First, the base case. Think of it as the middle lane, not extreme, not boring, but stable. In this world, inflation continues cooling, central banks hold rates steady, and Bitcoin acts like a grown asset for the first time in its history. ETFs keep attracting moderate institutional flows, pension funds, private banks, even cautious wealth managers finally adding a small allocation. Retail investors don't rush in like 2021, but they quietly DCA each month. Here, Bitcoin grinds upward in waves. 55k, 70k, 85k, maybe touching 100k before consolidating. No parabolic madness, just slow credibility. And in this scenario, your best move isn't leverage, it's patience. Keep stacking through dips, rebalance when euphoria peaks, and let time do its work. Now, let's open the bull case. This is the world where every domino falls in Bitcoin's favor. The Fed cuts faster. Liquidity floods global markets. ETFs report record inflows month after month. Suddenly, media headlines turn from "Is crypto dead?" to "Institutions can't get enough Bitcoin." Retail crowds come back, not through exchanges, but through brokerage apps and 401k products. Narratives collide: digital gold, AI collateral, sovereign hedge, store of value in a data age. Layer 2 networks scale faster than expected. Energy FUD fades. Regulators start focusing on fraud prevention instead of trying to ban innovation. Bitcoin matures, and the world notices. Price-wise, we could see a breakout beyond 120k, maybe 180k, 200k if momentum snowballs. But here's the key: that doesn't happen from retail frenzy alone. It happens when institutional rotation occurs, when bonds and cash become unattractive, and Bitcoin becomes the new alternative bucket. If that happens, volatility will explode in both directions. Huge rallies. Sharp pullbacks. The weak will try to trade every move, the discipline will let compounding take care of it. The bull case isn't just price, it's legitimacy. It's Bitcoin graduating from rebellion to recognition. But every light casts a shadow. So let's face the bear case, the one nobody wants to talk about. What if inflation re-accelerates? What if the Fed can't cut because energy prices spike again? What if regulators in the US or Canada tighten disclosure rules for crypto ETFs, or taxation becomes stricter? Add a liquidity crunch in Asia, a global slowdown, or another over-leveraged exchange, and fear spreads faster than logic. In that scenario, Bitcoin could retrace hard, 35K, 28K, even retesting 25K briefly before equilibrium returns. It wouldn't be the end, but it would remind everyone that volatility is the toll you pay for innovation. Yet here's what separates pros from amateurs. The pro already mapped all three outcomes before they happen. They don't panic because every move fits somewhere in the plan. They know their DCA levels, their profit layers, their cut lines. They know what portion of their wealth sits in Bitcoin and what stays diversified. That's how you survive uncertainty, not by predicting, but by predefining. And if you're wondering, how do I know which case is unfolding? Look at the signals, not the feelings. Signal 1, ETF flows. If inflows are steady and net positive, institutions are absorbing supply, bullish. If they dry up or reverse, smart money is risk-off, base or bear. Signal 2, real interest rates. When rates drop below inflation, money looks for yield elsewhere, that's your fuel. When real rates stay high, liquidity tightens, Bitcoin stalls. Signal 3, a liquid supply. Watch how much Bitcoin hasn't moved for 12 plus months. If that percentage keeps rising, conviction is high. If long-term holders start selling, brace for pressure. These three metrics tell the story faster than any influencer or analyst ever will. So as you navigate 2025, remember, you're not chasing a prophecy, you're reading a map. Now imagine yourself a year from today, markets volatile, news chaotic, politicians arguing, analysts screaming, top or bottom. But you're calm. Because you already built your framework. You know what to do in every lane. That's how the wealthy think. Not in predictions, but in probabilities. Now let's turn this roadmap into something you can actually use. Because frameworks mean nothing unless you act on them. Here's the simple truth, the people who will win 2025 are not the ones who call the top or bottom, they're the ones who keep showing up every month. If you had invested a fixed amount into Bitcoin every single month since 2017, through all the crashes, scandals, and manias, your average cost today would be near $19,000. That's the quiet power of DCA, dollar cost averaging. It doesn't care if it's Monday or madness, it just buys time after time. And time, my friend, is undefeated. So here's your structure for 2025. Pick your amount. Maybe it's $100, maybe $500. Split it across dates so you don't overthink. Add a simple rule: if price drops 25% below your average, you buy a little extra. If it rises 80% above, you trim a bit. That's how you turn chaos into consistency. Because consistency compounds confidence, and confidence compounds wealth. And remember, your Bitcoin exposure doesn't have to be huge. 5% to 15% of your overall portfolio is more than enough to capture upside without risking sleep. The rest can stay diversified: equities, ETFs, cash, maybe some real assets. Bitcoin should amplify your future, not control it. Now let's talk psychology, because 2025 will test everyone's nerves. You'll see thumbnails screaming, $500,000 next month. You'll see panic headlines saying, Bitcoin is finished. Ignore both. Neither will pay your bills. Your system will. The secret is emotional neutrality. When price goes up, smile, don't chase. When it goes down, breathe, don't break. Because if you stay steady through both, you'll end up owning more when others are confused. You don't need to time Bitcoin, you just need to outlast the impatient. And here's something deeper: every cycle creates a transfer. Money moves from those who want excitement to those who want peace. From gamblers to builders. From speculation to structure. That's who we are here. Finova XAI isn't about hype or fear. It's about intelligent systems for financial freedom, tools, not noise. And if that resonates with you, if you want to build wealth quietly while everyone else screams online, right finger subscribe to the channel right now. Because this year we're going further: monthly roadmap updates, macro breakdowns, ETF flow trackers, and real frameworks you can copy, not just theories you can admire. No paywalls, no shilling, just clarity. Hit that subscribe button. Turn on the bell notifications so you don't miss the updates that the algorithm won't show you. Now, let's finish strong. Imagine it's December 2025. Bitcoin didn't make you a millionaire overnight, but it made you wiser, calmer, more strategic. You know exactly where your money is, why it's there, and what it's doing for you. Your emotions aren't in charge anymore, your system is. That's real wealth. Not the dollar amount, but the freedom from fear. So when people ask, where do you think Bitcoin will end up? You'll smile and say, wherever it goes, I'm already ready. Because you built the plan. You built the mindset. And you built the patience. That's what this whole roadmap was about: turning uncertainty into structure, and structure into strength. Bitcoin 2025 might go up, down, or sideways, but if you stay disciplined, you'll always move forward. So keep stacking smart. Keep learning. And keep your eyes on the decade, not the day. This is Finova XAI. the place where clarity meets compounding. Thanks for watching, and I'll see you in the next episode.